Here now, joined by Bill Biederman, Arlen Suderman, as well as Bob Utterback, looking at the feed cost side. I mean, Bill, when you look at commodity prices right now, on the grain side, good news for those grain farmers. On the feed side, though, there's a lot of concern right now, and some that didn't book thinking that maybe feed costs would go down. After USDA's March prospective plantings report, what do you think is the outlook for feed costs?
Well, I think that the outlook between now and mid-August, when we have a pretty good idea on yields, is going to be very high risk. So, I mean, I just want to give this one example. If we have 177 bushel like last year yield, we could have a carryover below a billion bushel, which would be unthinkable as far as what it could do to prices. So I think it's in the best interest of all people who use feed is to protect the upside. And on the chart, 740 is kind of a good pivot point. If you can protect a 740 number using options or things like that, that would at least give you some form of a safety valve. Buying the breaks are easy. It's when it's breaking out to the upside that's hard.
Arlen, if you were a livestock producer now and trying to create a game plan when it comes to feed, what would you be doing?
Yeah, I agree. I'd be looking at securing the breaks in the market because I think that's what we're going to be seeing a lot of traders do is buying the breaks going forward, unless we can get a much bigger crop out of South America, the safrinha corn crop, than what is currently anticipated. Our estimate for Brazil right now is one of the highest out there. And now the forecast is turning drier here in recent days for the safrinha corn, particularly the center west district, a much drier shift. April is a critical month, so we could be adding more problems to the global corn supply. And I estimate that we're going to lose at least 20 million metric tons of exports out of Ukraine over the coming marketing year as well. That's got to be made up by the United States, Brazil, and Argentina.
Yeah, I mean, when you look at some of this aggressive bidding that may go on just because we're still trying to wrap our heads around what's going on in Ukraine and with the Russia situation, Bob, for a livestock producer, there's always risk, but there is a tremendous amount of risk and upside potential, it seems, when it comes to some of these feed costs.
Yes, and I think the two singles I'd be watching for after, I'd say, late April, if the December corn contracts in May starts taking out the April highs, that is a big red flag for a lot of end users. You got to get something in protection. Option premiums are going to be pretty strong. So unfortunately, I hate to say it, but you got to use the board or the bull spread. Buy the front end, sell the back end. But here again, you're going to have to be pretty agile because it's going to be very volatile. If we in May start taking out the April highs, that'll be a signal that weather scare is becoming a really serious factor. And then the end users are going to scramble aggressively, and that means the front end is going to rally over the back end. And if the bull spread's rallying, the board's going to be rallying, basis is going to be under pressure. So having possession is probably the best way to go. To have control of your inventory is probably the most secure way, but most guys don't have the storage space to put everything on hand.
All right. Bob, thank you. Bill, Arlen, we appreciate it. Thank you so much.